Hey guys, hope everybody's doing well today. We're back with another Wednesday video of the options updates. And kind of like I suspected, uh, getting into, since I transitioned into longer DTE trades, kind of profit taking daily has slowed down. And so I find myself slightly bored with the options market at the moment with the way I'm been running things. So I may look into trying to do some different things, and I probably need to play the call side a little bit more. And I'm just not there yet. My returns are fine. If I compare returns, realized profit to my net liquidation value, I'm getting about 3% this month. And that's nothing to shake a stick at because that's about 36% annualized. But I found that it's a little easier doing long DTE trades. It's a lot less stressful. Even if something goes in the money, you're not in a panic to make a decision because you usually have a lot more time to examine, figure out, what the best plan of attack is. Instead of doing weeklies, where if you sell something and all of a sudden something happens, you're kind of panicked to figure out what to do. So with these long DTE trades, you kind of can just sit back and let the market do its thing, right? A little bit. But I'll go over it a little bit more as we go through. And if you're new here, like, share, subscribe, do all that good stuff. These options trades I do on Wednesday. If you missed the core of my channel, I'm going to link the last couple of videos that I think are really core to this channel, and that's the Retire with Less series. If you missed that, check it out. And then I'll link the Income Fund Showdown video as well in here. Those two kind of is what I do here on the channel, and these options things on Wednesdays just show you what I'm doing in the market as far as options are concerned. So let's get into it. So normally I start out with my longs and my leaps and all that kind of stuff, things that am wheeling and whatnot. And there's not much of a change this week, but we'll go over it just really quick. No change in Viatris. I got 2 leaps at $3.10, just waiting for Viatris to make a little pop, and we'll try to sell those for a profit. Rocket keeps rocketing down, but there's no changes here. I actually had a mistake on my last week video. I had this as expiring 7:30, but it actually expires 8:20. So I have 3 puts expiring August 20th on Rocket, 2 at 17 strike and 1 at 16 strike. So nothing really big there. SoFi just is following Rocket, keeps dropping. I have to consider possibly adding to this position. And if I do add, it'll be via a cash secured put. I just haven't done that yet. But I do have 4 covered calls up against the 400 shares that I do own at $18 strike, and we're just going to wait for those. Those are expire August 13th. Next up, this is the big update of AHT. A lot of you were wondering what they were last week because I didn't have complete information because they did a reverse split. So the position overall is in pretty poor shape. After the reverse split, my cost basis of 100 shares is $38.42. Luckily, we've sold all this premium against it, and $864.21 in premium against it. So that offsets the cost basis a little bit. So the stock cost basis $29.78. AHT currently priced at $17.08. So down total $33.05. I've looked at the options chain, and there is pretty decent money out to $30 on there. But I do have 5 calls that are split adjusted, which is kind of weird because 5 five contracts. Sorry, five contracts is worth 500 shares. But I only have 100, and I still have 5 covered call contracts. The split on that is because it's a reverse split. It seems kind of weird, but this is I'll probably have to wait until this expires before I can sell another call on it. We got earnings coming up. What else? Infidelity. This is in my Fidelity Roth. And honestly, I really do not recommend using Fidelity for options. It's not because like this, I sold these 5 for 10 cents a piece. And the way Fidelity has it, if it's under a certain amount of premium, you can only go in 5-cent increments as far as buying them back. So I either have to buy these back at 5 cents each, which would be a 50% profit on those covered calls, or I have to let them expire. So I got to debate whether I'm going to let these expire, buy them back for 5 cents, and then sell the 30 strike out. I don't know. I'll have to do some math. It actually probably would work out. But that kind of bugs me about Fidelity. Like, I can't buy this back for a penny. Even if it was, I'd have to buy it back for 5 cents. So that's the AHT position. We'll just kind of bag hold this. Hopefully earnings are good. And hopefully the pandemic doesn't rear its ugly head and start shutting things down again. And we'll just have to wait and see. Because I got into this as a reopening play, and it just didn't work out. Next up is CVM. Got into this one at the complete wrong time. It was right when like the day I got into the put, like a day before the FDA was going to make a decision. I didn't even check. I just threw on some premium, and it was at the time it was at the $10 strike when I sold that. It was around 60% move that it had to make to get there, because it was trading like around $22 a share or something like that. Well, it got there. It definitely got there, because it's now $7.89. But I got 3 call contracts sitting out there, so no change there. Still down about 12% on the total position, so no problem. We'll just wait and go from there. It seemed like I had a good up move today, and we're just, like I thought we were going to do, is bag hold this for a little while and try to play it with calls. So now we'll move on to the day-to-day option, is what I call the bread and butter option portfolio. And it was a slow week. Like I said, a lot of my things are going out. I set up August, like early July, right? And so 45 plus days out. And so, those are just sitting out there baking, and I'm not really doing any trades, right? And that's fine, I suppose, because, I got about we'll see later, but I got about $3,300 of premium out there baking, and I've collected about $2,300 roughly. I'm not sure. I'm thinking off the top of my head, $2,300 of premium for the month of July, which is it's like a 2.5% return on my net liquidation value. So 2.5% return, I can't really complain about that. That's like, oh man, you're gonna make me do math now. That's like 30% return annualized. So, that's not nothing to shake a stick at. So, and I'm only using probably, between 30 and 40% buying power. So I got some room to add some more if I wanted to. But for the week of the 21st through the 27th, I only closed down 2 positions. And the first one was Bed Bath & Beyond. I closed it for 25 cents. Made a little over 50% profit on that for 2 contracts. Profited $56.80. That was a 26-day hold. And then I had, if you watched last week, I had bought in a Carnival Cruise Line Leap. And I had paid $5.80 for that one contract that expired out to January 2023. And they had a pop, and I sold it for $7.05. So profited $123.63 in 6 days. So that's it. That's all I did. The rest is still baking, but I did put on a lot more than I took off. So we'll go over here and look at those. So if we go to 7/21, you'll see I put on 2 wish contracts, expired out to August 27th. So that was a 31 day, well, it is 31 days now. 850 strike, 2 of those for 50 cents each. Went back to my Winnebago, put those out 52 days out to September 17th. I did a 60 strike price, collected $1.40 on that one. Now this one's interesting. And see, this is where I have a problem. and I think it's from boredom. I think I may need to get back into putting on a couple of weekly trades, just to keep me active, because then I start looking at weird stuff. So I put on this credit spread, and it's kind of an earnings play, and it's a ticker symbol AXL, and it's Axle. It's an axle manufacturer that provides axles and gears and whatnot to the automotive industry, based in Detroit, Michigan. They make a bunch of money and are pretty cheap. They have earnings coming up in a couple of days. After I put on the put, I went and checked. There is some concerning news surrounding the company about they might lose some portion of a contract with GM. So that, depending on the earnings call, we'll see how that goes. But I sold a $9 strike put. I sold 3 of them for 50 cents a piece, and it was basically at the money because the stock price of the date of contract was $9.45. So sold 3 of those, collected 50 cents a piece. Not bad. And then to complete the spread, I bought $8 puts at 20 cents a piece. So with a spread, you get the difference between what you collected from the sold put and what you bought from the bought put. So that's a difference of 30 cents. I did 3 contracts each, so that's $90 net. So you'll see right there, 149 minus 60, roughly $90, 89, $88, something like that after commissions. So my thought is, if this thing tanks on earnings, I'll be able to, I'll probably take assignment of the stock at $9. I'll probably sell the puts out for a profit, because if the stock tanks, these bought puts will increase in value. So, I'll have profit on the bought put, then I'll be assigned 300 shares at $9, and I'd be able to sell calls on top of those. So that's what I mean about being bored with long DTEs. Another spread I did, this was not out of boredom. This was out of trying to maximize my margin usage a little bit. And this is on TNA, which is the Russell 2000, basically the IWM ETF triple leveraged. And went out 52 days, sold the 65 strike price on that, collected $3.05 in premium on that one put. And then I bought the $50 strike for $1.05, so that spread netted me $2 on this trade. So I, $200, 52 days, and 65.50 spread. And then yesterday I sold Academy Sports Outdoors, or is it online? I think it's outdoors. And that was another 52-day trade, 30 strike, sold one of those for 80 cents. And then I'm playing here the housing industry, another 52-dayer. This is BZH, which is Beezer Homes. Strike price of $15. 50 cents each, 2 contracts on that one. They paid me to put that one on. They paid me to put on that Wish one too, 28 cents. And then last but not least is American Airlines, ticker symbol AAL, 52-dayer again, starting to build out Septembers. And that's what you'll see. All these 52-dayers are all September's 52-day DTE. So I'm building out the income now for September. I'll probably start adding some weeklies in to probably realize some more premium in August. We'll see. Depends on how bored I am. But this was at a strike price of $18 for American Airlines. Collected 51-cent premium, 2 contracts there. This was the best chart that I found in all the airlines at the moment that didn't have earnings coming up. They were, $18 was below support, decent looking chart, and another reopening type play again, but I think American Airlines will probably be okay. So now let's take a look at the premium cooking. Like I said, building out September a little bit more, so now I got almost $620 built out in September. August, I still have $2,733 cooking in August, and still have one put for July. If we go to the quick view, this first page gives you the option contracts closest to expiration sorted here. So this is the one that I have left in July, and that's Lemonade. $85 strike, 3 more days left to go. I have one contract in next week that is currently in the money, and that's the XOP ETF, and a couple that are just like right there, and I'm not concerned about it, and we'll just deal with it as it comes. So overall, slow week, but I think it's going to end up being productive after, we look at that, because closed 2 positions, gained $180.43 in profit, and then opened 7 positions for $808.08 in premium, and most of that went to September. So buying power used sitting at 40% right now. I won't mind adding up to maybe 45. We'll see how it goes. Depends what the market does. It looks like the market might be having a little bit of trouble tomorrow, because it doesn't look like they're liking these tech earnings, which seems odd to me, because if you look at Google, they blown away revenue, which was amazing. But I don't know. We'll just play it by ear. So that's the overview. I know it seemed like this was long, and I didn't even do many trades, so if you guys have any questions or concerns, please like, share, subscribe, do all that good stuff, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.